Welcome. I'm Nate Krampe, founder of Lions Wealth Management. We have a lot to get to today, and we're going to be covering three distinct areas. First one is going to be Jerome Powell and his talk over the weekend on 60 Minutes. We're going to be also talking about the consumer and what it means to be reopening the economy. And we're going to get to Roth Conversions and are they right for you, and is now the appropriate time. So as you can see, we have a lot to get to, and I want to start with Jay Powell. Since he's the chairman of the Federal Reserve, what we want to do is listen to what he says and use that in context of what's going to be happening. So over the weekend, he was on 60 Minutes, and first note that that's always a very positive light for Jay Powell and what he's talking about. And he came out and said that he's ready to do whatever it takes to help stimulate the economy and to keep things going. So what that really means is that he's looking to buy more bonds if necessary. He's looking to print more money as necessary. And basically that's what he talked about, that he is printing money as fast as basically he can to get it out into our economy and the rest of the economies around the world. That's what the stock market wanted to hear, because we had this nice little rally off of that, and for the fact that they're looking for kind of that don't fight the Fed mantra. Now, last week though, Jay Powell had a completely different story. He was basically out saying that this is a really tough time, that we're going to be having an economic contraction just in this quarter alone of about 30%. So what that means is that we kind of fell off a cliff with our economy, and that stock prices are way too kind of elevated, and he thinks that they should be going down. So there's kind of a little mismatch on his communication there, but over the weekend when he was on 60 Minutes, obviously he had a very nice positive tone, and that's what the stock market was looking for coming into the week. Now, where do we go from here? Well, basically he also said that we don't have negative interest rates for bonds on the table yet. Well, on the same lines, the rest of the world's starting to price in the fact that our interest rates in this country may go negative. Now, what that means is that bonds are not going to be paying the interest in the same way, CDs won't be paying money in the same way, bank accounts, and a lot of other things. And what the hope is that that stimulates the economy, because you no longer can keep money at a bank. You're not going to get paid to do that. And so the hope is that the banks start lending more money, because that's how they can get basically any sort of interest, anything with respect to who they are. So that's kind of the thought there, that banks may have to start making some changes because of the fact that we may have lower interest rates or even negative interest rates in the future. Well, what does that mean then? I think that this is going to mean that, first of all, that we're going to have some inflationary areas and some deflationary areas, and we call that stagflation. Now, one of the best kind of items to look into and one of the best investments to hold then, and through the course of some of this unknown with the different currencies, is gold. So this is where gold may be an appropriate thing to have as part of your portfolio, but that's something that you need to look into for your own portfolio to make sure that's going to be correct for you. But there will be some opportunities coming, and it's because of the fact that we are printing money that will have an inflationary type of feel to it in the future. Currently, we don't know if we're going to have negative interest rates, and that is because of a deflationary process that happens, and then gold will be kind of the light of which is to come, inflation or deflation. So just be aware of some of those items out there. Okay, so that is what Jay Powell said. That's what kind of stoked the huge uprise in the markets. And then we have Moderna coming out with their vaccine trials that are in phase 1 trials that are seemingly going well. So that all is looking very nice. Well, what does that bring us to then? Obviously the reopening of our economy and the consumer. The hope is, and what the stock market is really thinking, is that you and I are going to get back to our lives the way that we used to go. We're going to go out to the restaurants, we're going to go shopping the way we used to, and we're going to go to retail, we're going to start traveling more, we're going to start doing the things that we wanted to do because of the fact that we're getting close to a vaccine, because of the fact that we've been pent up for a couple months and we need to get back to the reality of our lives and spending money. So that's the hope. That's what we are kind of putting our faith in right now with the stock market. So retail sales really have been abysmal, and they have not been at all worth even kind of considering because they've, again, fallen off a cliff the same way that our economy has. And if we look at kind of where we're at right now, we do think that we'll get a bump and a boost from the consumer because of the pent-up demand. So there will be demand that happens over the course of the summer in retail. You're going to go out and buy clothes, you're going to go out and get a haircut, you're going to go do things, and that alone is going to be very helpful. But what happens after that? After that initial bump is going to be kind of where we go with the next leg, where we go with, obviously, do we continue to keep spending in the same way or not? And that's going to have more of that psychological effect on, are we going to be comfortable going out in public? Are we going to be comfortable going back and doing things the way that we were? And that's also going to be a part of travel. So travel is going to be a big piece of that. And right now, as the surveys show, many people don't want to travel. We don't want to go on to an airplane. We don't want to go and sleep in hotels. We don't want to do a lot of the things that we used to be doing, and especially over the summer. So that, if that's true, if we are saying that and we actually are going to follow through with that, that's going to also have a negative impact on, obviously, the airlines. That's going to have a negative impact on the hotels and a lot of different areas out there. So just be aware of that there's going to be some kind of possibly more hardships to come, and especially with the consumer, as I don't believe that we are going to be coming back to where we were in spending. I think we'll have a little boost with our spending habits over the next month just because of the fact that it's pent-up demand. But remember, when we talk about demand, when we talk about supply is not going to be the issue. We're going to have enough food. We are going to have enough clothing. We're going to have enough services for us to basically consume. And that's where the industry is getting back going. The big fear now is that the consumer is not going to be spending the money, and we're going to be more saving the money. So that is going to be something also to look at in the future, because of the fact that if we don't spend, then our economy is not going to get back to where it was. And if we don't get, obviously, back to the spending habits, especially not only as a consumer but also on the corporate level, then I think that this economic downturn that we're in can be very prolonged because of that. So we have no idea. We have no idea how the virus is going to be affecting us, whether we're going to get a massive second wave or not, whether we get a vaccine in the time frames that we're talking about or not. See, these are many unknowns, and that's where the consumer is going to be key to moving on and getting our economy back in order. But with the unknowns that we have, again, this is going to be a time that we're just going to have to get through this period because of the fact that no one knows about what the future holds. Okay, last element then, that what we want to touch base upon is the Roth IRA and conversions. Are they going to be right for the future? Are they going to be right for you? Are they going to be right for your portfolio? And there's three areas that we want to be talking about when we talk about Roth conversions. Well, as of today, there's going to be a potential for higher taxes. We're going to be talking about avoiding the RMDs, required minimum distributions, as well as the tax-free withdrawals in the future. Well, let's tackle kind of the first parts of that a little bit more. So we have the Roth IRA, and remember, we are printing money right now. Inflation's going to happen. We have this massive debt that our economy and our country is taking on, and we're running this massive imbalance between the taxes we take in and what we're paying for with respect to the stimulus checks and things to try to help everyday Americans. So if that continues, we're going to have this massive imbalance in our budget, even more than what we do, And generally when that happens, we need to raise taxes at some point. So there is a kind of a way to say that we may have to raise taxes in the future. All of that then comes back to the point that it may be worth paying a little tax today at a lower rate so that we can be better off in the future if and when taxes do arise and do rise and go up. Then you have paid the money on the conversion at a lower rate. Well, next aspect makes this year actually very appealing for doing Roth conversions, and that is the required minimum distributions. As part of, and this is where you need to kind of think back to what happened last year when we had all of the different changes that came out with the Secure Act and the new ways of retirement savings and things like that at the end of the year into the start of this year. That was when everything was still going well. The government postponed the starting of required minimum distributions for people that were turning 70 and a half until the age 72. So no longer, if you have not started required minimum distributions yet, you do not need to start them until the age 72. That's a very good reason to say it may be worth putting money into the Roth IRA, converting it from your traditional IRAs. Now, as part of the COVID-19, the CARES Act, the government went one step farther and said, you are not required to take a required minimum distribution for 2020. Great news for those of you who do not basically need the money. Well, because of that, it may be worth it to, instead of using that money taken out of the IRA account because it was mandated, maybe you can actually use that as part of a Roth conversion, put it into the Roth, and because you're at a lower point in the markets, obviously over the years, as we start to gain traction and the markets go up, the account value goes up, you're going to have more money that is tax-free in the future. So that's the other key element here, is that this money can be used tax-free in the future. And if you've never done this before, it's a 5-year window from the time we put money into it until the time we can use it. If you've converted Roths before, well, then we have already started that 5-year clock. But what that means then is that the money can be used at some point in time in the future for, obviously, uses that you need, and it's tax-free for the money that's going in there. And if you keep it in there for longer than that 5-year window, it's tax-free growth. So basically the prospects of taxes going up is very significant, and Roth IRAs are a huge blessing to help mitigate some of that, and Roth conversions especially may be appropriate for this year because of the ways that the Secure Act and the CARES Act have been working. So those are the 3 things that I'm looking at. 3 things. We have one with the economy and Jay Powell and the things that he's talking about. We have the second aspect with respect to the consumer and just the feeling, are we going to be spending money? And that's going to be more of the telltale sign of what's to come. And then the last aspect, obviously, is a planning element for your wealth and the possibility of doing Roth conversions. Advisor, talk to your accountant, your tax attorney as well, and find out if this is going to be right for you. So with that, have a great rest of the day, and feel free to reach out with questions. Take care.